the team is probably the most important part of a potential investment. Be prepared, have your pitch deck ready, have a data room, understanding what does it mean to have a venture capitalist in your company, because things change from there on.
Welcome to the first episode of To Be Discussed, and we are really happy to have Christian Arndt with us as a guest today. So welcome to the Brick Tower, Christian, and being here for the interview with us today. First question is a little bit of a warm-up question, and it's if you could have one superpower, what would it be and why?
Well, that's a very tricky question for the beginning. So first of all, I'm really glad to be here today. I think my superpower would be speed, maybe like the superhero Flash, because I think it's quite important in the business where I'm working to be fast, to be on time, to understand what's currently on or going on in markets, or what are the topics you need to work on, and I think speed is a very important skill in that direction.
Okay, very cool. So you already mentioned your business, so let's talk about this. We'd like to learn a little bit about your background. So how did you become an investor at Hightech Gründerfonds?
Yeah. So it actually started besides my studies. That was in 2010. I never had a classic corporate career. Besides my studies, I worked for a student organization which we set up in Cologne in that point of time, and that was my first touch point with entrepreneurship and startups. And I never looked back, and I never did something else, to be honest. I worked for several startups besides the studies. Then I did an internship at an investor between bachelor's and master's. And then I went back to university to the Netherlands to do the master's, because otherwise I thought I would never have done it afterwards. Then I went to Berlin to work in the startup environment there for a couple of years. And I think in 2015 I decided, or there was opportunity to join the investor side, and I worked for a corporate VC department of a mid-sized German company. And then in 2019 I switched the sides and started at Hightech Gründerfonds doing the software investments at the fund.
Great, thanks. So now at Hightech Gründerfonds, let's have a look at what is your portfolio like. So in which startups do you invest? What is your investment focus at Hightech Gründerfonds?
So we are a generalistic fund. We have three big teams. The first team usually invests in everything that's related to startup and to hardware and industrial tech. The second team is related to life science, chemistry. Then we have a third team, and that's the one where I'm working for, that is related to everything regarding software. And we are an early stage investor, usually the first institutional ticket that comes in, investing up to 1 million in the first round, and then several million over the follow-on rounds. The fund is backed, or at the moment we actually announced it today. The final closing of the first fund, of the fourth fund generation. We now have more than 1.3 billion under management. So far we have done around 700 investments, and I think with the next generation that we just announced, I think there will be another probably 200, maybe 250 investments out of that fund generation. Which we invest in German startups, or mostly in German startups, and sometimes also in European startups.
Really sounds impressive, and I've seen the headlines today in Handelsblatt, for example. So congrats on this. From your point of view, what does a startup need to be successful from an investor point of view?
I think it depends a little bit on the point of time in which point of time the startup is. So if you're a really early stage startup, from an investor perspective, the team is very relevant or crucial for the success of the startup. If you're a later stage portfolio company, let's say Series B plus, and you already have a proven business model and your revenue is 10 million or 20 million, I think then the team is not so important anymore, because at that point of time you can get external managers that can help you to scale the team or to scale the company. But if you are in the first place a seed or early stage company, so the stage in which we invest, the team is probably the most important. The most important issue or the most important part of a potential investment.
Okay, so when you look at a team, is it more the industry insights that the team has, or is it that they have really a strong track record in the startup ecosystem? Is it a mixture? What do you value the most? What is most important for you?
From my perspective, I think it's a little bit of everything. So, yes, ideally you have industry expertise, you have traction, so idealistically in the startup environment, so you know maybe how it works, you know maybe how to raise venture capital. Third of all, you're a good fundraiser, so you know how to tell a story for that investors like. I think these are the three most important points there.
Talking about the story, so what points does a good story contain that an investor really likes? So what is this story like?
I think that sounds very simple, but it's something that a lot of startups maybe do not very good at the beginning. It's you need to understand if an investor maybe has 2 or 3 minutes to look at your pitch deck, and if it's about the story, but it's also, is it clear what the product looks like, what the company really does, which problems the company solves? And that's something that sounds very simple, but I would say I see 10 to 20% of all the pitch decks that we have, it's not really clear what the startup in the end is really doing, and especially which kind of problems they solve. And that's very simple usually, but it's really hard to, or apparently for some startups it's hard to put it on paper what they are really doing. Unfortunately, it's usually something we see, especially with teams that come out of university. Because if you already have a sense of business, you have done that 2 or 3 times, it might be easier for you to strip that down and make it clear what the company is really doing and what the vision is. But I think I would say it's topic number 1. And then looking at the story itself, I think it's important to make the problem crystal clear. That's point 1. And then what we see is you have the solution, maybe something that you experienced yourself. So you're fixing a problem that you experienced yourself in the past. Then it becomes a little more tangible for potential listener. It's also important that the market is sounding. So if it's a market and you solve a problem, but the problem that you solve is a problem of 5 people around the globe, it's not the best part of the story, I would say. So in the end, it's a mixture of everything, but I think it's important. The problem should be crystal clear. The solution should be smooth and understandable for everyone. The market should be in a nice size, and I think that are good parts of the story in the first moment.
Okay, perfect. So you already mentioned that you're looking at a lot of pitch decks. So to give us a feeling or an indicator, like how many pitch decks actually do you look at per month, per week? Can you estimate how many this is?
So we as a fund, the number that we look at is it's 5-digit per year. So for me, on a person or on an individual investment manager level, two per day, I would say. Mm-hmm. It's probably around 2 per day. Maybe sometimes it's 1, sometimes it's 2. Sometimes you're at a conference and there's a lot of pitches or pitch deck that you need to screen from the beginning on. Then it's sometimes a little more, but I would say on average something between 1 and 2 per day.
Okay. So when we look at the financing opportunities for startups, there are plenty out there, actually. So there's not only venture capital. So for which startup is venture capital actually the right funding option? And which startup would you recommend other funding opportunities instead, like bootstrapping, business angels, etc. pp?
Yeah. I think it's a very good question, because if you just look at a statistic, I think in Germany, how many companies are set up per year? Maybe 300,000. How much of them get the first ticket in first venture capital tickets? Maybe it's a couple of hundred per year. So it's a very small fraction of all the companies that are founded per year. And I think if you just look at the last couple of years, it seemed a little bit like raising venture capital is the holy grail of setting up a startup, which from my perspective is not. In the end, it's a financing method for a very small amount of companies that have the possibility to grow very, very fast and scale very, very fast. And I think that's something which has been forgotten over the last couple of years, because there were a lot of startups, from my perspective, that, or let's put it different, where I think venture capital might not be the best option for financing. So in the end, what is important, you need to understand you need to grow very, very fast, because that's the business model in the end from a venture capital perspective. So if you aim for 2 million in revenue in 5 years or in 10 years, it's probably not a good fit. Also, if you say, I want to stay in the company for 10 years or 20 years or 30 years, and then venture capital is usually also not the best funding opportunity, because the venture capital model in the end says there will be a point of time where the company gets sold. That's usually, between 5 and 12 years after the investment. And meaning the company gets sold, it means the entire company gets sold, including the shares of the founders, because otherwise it probably won't work. And sometimes we talk to founders where they say, we want to get your early stage investment, and then in 5 years we're making, 20 million in profit, and then we buy out the investors. Doesn't work. Never seen something like this. The only cases where the founders buy out the company or buy out the investment fund is when the company is not performing quite well, and then there's, for 100K, or there might be a little profit, but the company is not really growing very fast. Then the investor sells its shares to the founders to clean up the cap table. So in general, I think venture capital only for companies that grow very, very fast and plan to grow very, very fast, and understand that there will be a point of time where they are not the shareholder of the company anymore. I think that's quite important in terms of mindset.
Okay, so do you have an explanation why there is this misconception out there in the world that a VC is the holy grail and the only place to go when looking for funding? Do you have an idea where it comes from?
Well, there was a lot of great press around venture capital finance startups. Maybe it comes from that. It felt a little bit like in the gold rush times. And raising venture capital has been a proxy for success in the last couple of years. And in the end, it's not, because you can raise the financing round, or you can raise venture capital, but you still need to perform in the end. If you raise 2 million or 5 million or 10 million, in the end, it says nothing about the performance of the company. And from an investor perspective, and probably also from the founder's perspective, success should be when the company gets sold in the end, because then is when the investment gets redistributed to or allocated to the investors, and everything that happens before is just it's worth nothing in the end. The investors invest to get the company in the opportunity to grow and to sometimes build a life-changing company. But in the end, success is when the company gets sold from an investor's perspective.
Perfect. So if you have a startup, or if you're a startup and you qualify for VC money, let's put it like this. So you have the right setup to get VC money. How do you identify the right VC for your company? So what is the step that the founders should do to identify which VC is the right place to go for them?
Yeah, very important question. From my perspective, it's a 3-step approach. So first one is you probably get a list in the internet with all the VCs that are active in Germany, but that brings not so much. You need to know, okay, who's investing in, let's say, in the area in which, or in the vertical, or in the area, or in the business model that you are working on, and narrowing that down. How can you do that? First step is going to the websites of the VCs and understand, okay, where they have done their last investment, what is important for them. Most of them tell on the website what they are looking for, how much they invest. So is there a fit in investment size? Is there a fit in geography? Is there a fit in terms of verticals in which they invest? Is there a fit in the stage? And that's something, I think that's the first step, to understand that. Second step is how should you approach a VC? I would not send out the mass mails to info@investor ABC. The best way usually is to get an introduction by, I don't know, another founder or somebody else. Sometimes that does not work. Then I would try to do it over LinkedIn, because from our experience, the success rate is higher instead of sending an email or the pitch deck to info@. And if you then got in contact with the VC, and maybe in the end you got something like, I don't know, a term sheet, or you really thinking about, hey, that could be a nice fit. Something I always recommend to all the founders where I invested in is look in the portfolio of the investor and talk to existing portfolio companies of that investor. Why? Because everybody tells you, hey, we are the best investor and we do this for you and that for you. But maybe you don't, in the end, you will work together with that person for maybe 10 years. And if you don't like each other, it's very hard to work together. And in the end, you should know what you sign. And therefore, it really helps to talk to other portfolio companies. And if you ask for, I don't know, contact to other portfolio companies, maybe it's also worse to talk to portfolio companies that not got recommended by the VC, but maybe to others where you found press releases or that you found on the website. Maybe there's a good reason why they did recommend A and not B. That's something I always do and recommend to the founders where I'm talking to, and something that every founder should do. Because in the end, the VC does the same. We also do ref calls. We talk to, I don't know, former employees, former employers, and why should the founder not do that?
That's cool. I think these are some good tips, really good insights that founders can. That really useful for founders, I guess. So you already mentioned the team. So how important is this relationship with the team, and that you really match with each other, and that there's a connection between you and the team from the very beginning?
Yeah. In the early stage, so the area or the stage in which we invest, I think it's important, yes. You don't need to become best friends with your investors, but you need to be able to work on a professional level for, let's say, the next up to 10 years. And if, like I said before, if you don't like the investor in the first couple of meetings, I think it's very hard to work together for the next 10 years. And if we have that in our fund, I think that's my philosophy as well. If I talk to a team and I think it's an interesting team, maybe the product is also nice, and they sometimes have traction, but for some reason I don't connect with the team, I usually hand it over to somebody else in our team. Because also from my perspective, it's important that there is this connect to the team, and if you not really click with the team, 10 years can be very long if you don't like each other. And usually if I don't feel the connect to the team, it's usually also on the other side. So the team usually feels the same. And if we still think it's an interesting startup, but for some reason there is no fit on the personal level, why not hand it over to somebody else? That's the philosophy that I have here when I'm looking at deals. You need to be at least, it should be okay if you sit together in a room for 2 hours and work on a professional level together. If that's not possible and you think that's very hard, then it's probably not a good fit.
Okay, that's perfect, and that's probably that's the case in all like business-related areas. So what are clear, besides that, the personal fit, what are clear no-goes, exclusion criteria for investments for you? So where you say, I can't do this, it's really impossible to do an investment.
I think an absolute no-go is if I have the feeling that there is some kind of betrayal. So the team tries to, I don't know, to link me, sending over wrong information, or I don't know, saying, okay, we have 800K in revenue, and then you look at the numbers and the revenue is 200K. So or something like this. So because I think that's not good for the trust base, and then we are back to the level where we talked about. If I always have the feeling that the team does not say the truth all the time, how could we work together? I think that's an absolute no-go in the end.
Yeah. Totally.
It's not about, I don't know, if they say, okay, we make 790K in revenue, and in the end it's 780 or something, that's not a big deal, because it's let's say similar in the same area. But if I really have the feeling, I don't know, there was wrong information and they said that in order to get the investment, I think that's an absolute no-go.
Yeah, I understand. Yeah. So if it comes to an investor meeting, how can founders prepare for it? And what can they do to speed up the fundraising process? You mean in the fundraising process? In the whole fundraising process, but also when they prepare for a call or for a meeting. Yeah. Some founders might have noticed it takes a little longer at the moment to raise venture capital than maybe it was in 2021 or at the beginning of 2022. So what can you do in the end or at the beginning? Be prepared. Have your pitch deck ready. If you're going for fundraise, have a data room ready. So have all the documents that you need. I don't know, the very formal one, like I don't know, the documents, how you set up the company, the working contract with your employees, stuff like this. That should be somewhere there. You should not send it over in the first meeting for sure, but everything should be there, because at some point the investor says, hey, I want your data room, I want this and that data. And when you then start to put everything together and say, okay, I call you back in 3 weeks and then I have all the documents together, that's not the best case. So you should be prepared that if you're going for fundraise, preparation is very important. Sometimes we also say it can be helpful if you have 2 pitch decks. So the story should be the same, but one pitch deck that you can send over to an investor, because some investors will say, okay, before we talk, please send over a deck. And if you then send over 10 slides with 10 pictures, that's usually not sufficient. If you're standing, I don't know, at a stage somewhere and explaining your company to the audience, then it's okay if there's not so much text on the pitch deck. But if you're sending it over, let's say we call it a read deck, then there should be a little more information, and having that in place as well, very helpful. Yeah. Okay. When we look at like what founder teams can do to do their homework, like to prepare, like what we talked about right now, what can a startup do directly now? What is the first step to secure an investment? I mean, if you have, let's consider a situation you already have the pitch deck. I think the best way is to structure your process, like we said in the beginning. So you need to check, okay, what are the investors? Which investors are interested in my topic? Because otherwise you're wasting a lot of time. And
in the end, it's not the time for being depressed at the moment. So fundraising takes a lot of time, and there will be investors that say no. Even in our best portfolios, you always have like 20 or 25 investors that say, okay, I don't want it, or I don't see the vision or whatever. I think that's quite normal. So don't get demotivated if somebody rejects you. That's quite normal. And sometimes with portfolio company of mine, just say if you don't get 50 rejections, it just means you talk to not enough investors in the end.
That's a good point.
Because in the end, there are 2 or 3 people that decide over the investment, and in the end, it's always a people business. And some like you, some don't like you, some believe the vision, and some don't, and therefore don't get demotivated if you get the first rejections.
It's a good tip. So for the last part of the interview, let's have a look at the current macroeconomic situation and the whole investment market out there, the investment landscape. So what will be different in 2023 compared to previous years?
Yeah. I think it's a very relevant topic and something that maybe some of the startups already experience at the moment. We come from very high levels of valuation in 2021 and maybe also 2022. And if you are in a growth stage, there are not so many transactions at the moment because a lot of the companies sitting on very high valuations, and you see the downturn in the public markets with companies, trading 70-80% below their highs. And that's something that trickles down in the private markets, in the venture capital. And if you raised, 3 million pre-seed round on a 50 million valuation, you probably have a lot of problems to raise a proper seed round at the moment. And that's something from our perspective that is out of the markets. There are some, let's say, exceptions. So if you are a serial entrepreneur and you already raised 100 million venture capital with previous companies, not so much change for you. But if you are a first-time founder, there's a lot more focus on KPIs by the investors and not so much on vision and story and what we can achieve over the next 3 or 4 or 5 years. It's more about hard KPIs. Everything is looking at, or everybody's looking at capital efficiency, what are your metrics, what is your payback in the software area, for example. And that's something that, from our perspective, changed 180 degrees if you compare it to the last 2 years. And I think there will be some startups that won't make it that won't make it to the next follow-on round, because they're sitting on so high valuations that are not justifiable at the moment.
Are there exceptions, or also are there industries, technologies that are really successful even right now in this macroeconomic situation in raising money, and where the investments are really still flowing in?
Yeah, I think there are some areas which are not as infected as the majority of the verticals. For example, climate tech is still quite hot compared to other verticals. Quantum computing is also fairly okay at the moment. Everything that's related to energy is also okay. But I would say for the majority, artificial intelligence, everything that is around ChatGPT, very hot at the moment. But around that, there's only focus on KPIs at the moment from what we see in the market.
Okay, talking about KPIs, there's always this famous conflict between profitability and growth. So what matters now?
Well, if we would have sat here a year before, I would say it's growth. Today I would say it's, depending on the stage, if you're an early stage startup, you're usually not profitable, even in the current market environment. But I think capital efficiency, so having your metrics in place, understanding what's your customer payback, let's say some kind of profitable or sustainable growth, let's put it like this, and not I don't know, spending 10 euros to get 1 additional euro in revenue, that's something that is completely off the table at the moment. So it's a sustainable growth, and then for later stage companies, it's profit in the end.
Okay. So another topic you already mentioned, you talked about climate tech. So it's quite near is the topic impact investing. So is this a real trend, or is it just a buzzword being out there?
I think if you ask the impact investors, it's not just a trend. It's I don't know. It might be a movement. It depends a little bit on how you structure it. From a venture capital perspective, there are impact funds that are regulated differently as let's say a normal fund like ours. It's Article 9 versus Article 6 and 8, so that's just the details in the venture capital area. I think important here is, I think it's a trend that is here to stay. I think important for them is they need to show that there really is an impact, and that in the end means that they might not can invest in all the startups, but only the ones that shows the impact. And there's, from our understanding, there's a discussion if it's like, can you have impact and a profitable fund? If you ask the impact investors, they say yes, it's possible. If you ask others, they say you either have to decide for impact or for profitability or a very profitable fund. To be honest, I'm not in a situation to judge that at the moment. I think time will tell if the impact funds can show both. I think there might be a tendency that it's possible, because you can have an impact if you invest in startup that have let's say a good impact on the climate, and why should that not be profitable? But I think in the end, time will tell.
Okay, before we close up, is there an insider tip you have, something that not every investor would tell us?
For startups, right?
Yes.
Yeah, I think the most relevant tip I can give to a startup is, if you're talking to investors, or if you think about raising venture capital, talk to other investors or talk to other startups, understanding what does it mean to have a venture capitalist in your cap table or in your company, because things change from there on. You cannot say, okay, I want to have this company for 10 years or for 20 years or for 30 years. Typically, a VC always wants you to raise the next financing round. So you're always in some kind of rat race. And from the outside, it might look quite romantic to raise venture capital, and then it's very cool, and you get, I don't know, you're in the press media, startup media. But from a founder perspective, you can also build a great company without raising venture capital. And well, I'm a venture capital, or I'm a VC now, so I'm also very glad if there are founders that want to raise venture capital. But I think it's very important that you make clear for yourself, do I really want to raise venture capital? What does it mean in the end? What does it mean for me and the company? Am I ready to sell the company in 5 to 10 years? Is that okay for me in the end? And I think that's something everybody should understand in the beginning, because sometimes I feel it's not quite clear to everyone. I think therefore it helps to talk to other people or to other founders that have done that way, or that have gone that path, and to understand if it's really worse and if it's the way that you want to go.
Perfect. So thanks so much already for this. Now, one last question, and it's as we are here at Brick and we have this Y in the middle of our company logo. So what is your personal why? What makes you get up in the morning and be motivated, and what do you want? What is your purpose in life? What do you want to achieve?
I was always very fascinated by entrepreneurs. I think when I was a small boy, I read some books, and I was very fascinated by the people that have set up big companies and being an entrepreneur. But at some point, I tried that myself, to be honest, I think today I hope I'm a better investor than I am the founder or an entrepreneur, because it felt like that's more the way where I'm functioning or where I can help the most. For me, I'm always very curious, and I love to be together in an environment where people are very, very motivated. Everybody wants to set up its own company. They want to change something in the end. And being in that environment is something that gets me up in the morning and motivates me every day, because there's so much pressure in the positive way there that everybody wants to change things, want to set up companies. I think that's something that motivates me every day.
That's really cool, and I hope it stays like this. So thanks a lot, Christian, for being our guest here in TBD. Thanks.
Thank you for having me. It was really nice.